This is Professor Russell James coming to you from Texas Tech University. Welcome to today's lecture from Visual Plan Giving, an introduction to the law and taxation of charitable gift planning. Welcome to Documenting Charitable Contributions, Part 2, Cash Gifts. This is Professor Russell James. Different levels of documentation require answering different questions. All gifts must somehow document answers to the questions of who made the gift, what was the gift, when was the gift made, and where was the gift given. Depending upon the level of documentation required, these questions may be answered by donor records, a statement from the charity, and/or completing IRS forms. Some gifts must also document an answer to the question of whether or not the donor received any goods or services in return for the gift. In other words, this was part of the reason why the donor made the gift. The answer to this question can be documented only by a statement from the charity. Finally, some larger gifts also require documentation of how the gift was valued. This how question can be answered by donor records or a qualified appraisal. In some cases, the entire qualified appraisal must be submitted with the tax return, and in other cases, only a summary of the appraisal must be included on IRS Form 8283. This is the general framework for how documentation levels increase as gift amounts and complexity increases. The next section examines the rules in more detail, starting with the smallest gifts. Gifts of cash under $250 require documentation of only the first block of questions. In other words, answers to the why and how questions are not needed. For these small gifts, documentation can come from either donor records or a statement from the charity. Specifically, cash gifts under $250 may be documented by a canceled check, a credit card statement, or a note from the charity indicating the amount, date, and the donor. As with other forms of documentation, this must be in place prior to taking the deduction. Thus, the note from the charity must have arrived by the time the tax return was filed. Or, if the taxes were filed late, then the note must have arrived by the time that the taxes were due, including any extensions. No corrections are allowed for documentation created after taking the deduction or after the tax return was due. Note that because of these documentation requirements, deducting a gift of actual currency, no matter how small, requires a receipt from the charity indicating the amount, date, and donor. Note also that a credit card statement here refers generally to any type of statement from a bank or financial institution demonstrating the amount and date of the gift, the donor, and the recipient charity. For example, a statement from a check card or debit card would also be sufficient. For gifts of cash of $250 or more, the documentation requirements are greater. Answers to the first block of questions can be documented only with a statement from the charity. In addition, the donor must have a statement from the charity indicating any quid pro quo related to the gift. Quid pro quo gifts refer to situations where a donor receives some item or service from the charity in direct exchange for the gift, such as, for example, a benefit dinner, where the donor's ticket represents both a contribution and payment for a meal. For cash gifts of $250 or more, the only documentation permitted is a receipt from the charity, indicating the amount, the date, the donor, and using the magic phrase, quote, "No goods or services were provided in exchange for these gifts." Of course, if the charity did provide goods or services in exchange for the gifts, the charity must describe and value the items. A canceled check, for example, will not be sufficient to document gifts of $250 or more. Only a receipt from the charity with the previously mentioned elements will be sufficient. The documentation requirements are based upon each individual gift amount and not the total of all gifts made to the organization. For example, a donor could make $240 contributions every day of the year to a charity, and all of these gifts can be documented by the canceled checks. However, in an extreme case, such as a donor simultaneously giving a stack of $240 checks to a charity, the IRS could collapse the transaction and treat it as a single transfer. Even though a donor can document an unlimited number of charitable contributions under $250 with canceled checks, if any one contribution exceeded this amount, then a canceled check would not be appropriate documentation for that one contribution. One exception to these documentation requirements for gifts of $250 or more applies to payroll deduction gifts made to a united appeal. Such gifts are problematic because there is no individual charity that could document the charitable transfer from a specific individual donor. Thus, it is not possible to comply with the typical substantiation rules. Because of this difficulty, such gifts are exempted from the requirement for a receipt from a charity. Instead, donors can substantiate with evidence of a pledge card indicating that no goods or services were given in exchange for the gift and documenting the amounts by the W-2 or pay stub. Gifts of money over $250 are all documented in the same way, regardless of the amount. Thus, at this point, we have covered the rules for documenting gifts of money. However, much of the complexity in documentation and much of the potential for abuse comes from gifts of property. Let's next examine those rules. This has been Documenting Charitable Contributions, Part 2, Cash Gifts. Join us next time for Documenting Charitable Contributions, Part 3, Property Gifts.